All right.
Okay.
So, Hamid, check this out. No, teammate, check this out. The last thing you said was, well, let's read the question, start at the top. Read it to me.
Which of the following is a key distinction between variable whole life and variable universal life products?
Right.
And so I can't remember if I want to say I put A on the test because I was thinking with whole life, with the cash value, you can withdraw money from those policies.
Well, this is true. Both of them, you can withdraw money from the policy.
Okay.
Let's go. Let's do a true or false question. Do true or false with it, right? Variable whole life policies allow policy loans from cash value. That's true. Variable universal life, they allow loans too, but it's called a partial withdrawal. Basically the same concept. Variable universal life has fixed premium. Well, no. Universal life, any universal life got a flexible premium. Because they saying what's the key distinction? Variable whole life has a guaranteed death benefit. Well, that's true. I mean, all of them have a minimum guaranteed death benefit. And D, variable universal life is regulated solely through FINRA. Lord have mercy, Jesus. And that's not 100% true because it's not regulated solely through FINRA because it's also regulated by the insurance department. So, which one of these is the key distinction? Universal life has a flexible premium. Whole life has a fixed premium. That is actually the main difference is they have a fixed premium. Can you hear me? Hello?
Okay, I can hear now.
All right. I want to say the answer is C. And the reason is variable whole life has a minimum guaranteed death benefit. Variable universal life doesn't. The universal life, the cash value the cost of insurance could go up and the policy actually could end up terminating. Variable universal life.
Okay.
That's what I'm thinking. D is just false. D is false. A is true, but universal life policies offer loans too. It's just called a partial withdrawal. So that's why I'm thinking it's C. So we'll see when we get to the end.
Okay.
Once you kind of use the process of elimination, just pick one and it's gone so we don't get stuck on that one too long.
Right, okay.
All right. You read it.
Any person who violates a cease and desist order of the commissioner pertaining to consumer information privacy may be subject to which of the following penalties? A monetary fine up to, I think it's $5,000 for each violation.
Yeah, I think that's right. I don't think they put you in prison for that. All right. If a change needs to be made to the application for insurance, the agent may do all of the following except I think the answer is D, because you're writing in ink. You can't erase nothing.
Erase the incorrect answer and record incorrect. Because it says accept.
Right. Obviously, if the answer is wrong, just delete it and start over. You could Make a note, the reason for change, it was an error. You could draw a line through it, write the right answer. You can't erase nothing during no legal document.
Okay.
All right, your turn.
B just bought a new car, which he anticipates will be paid for. He anticipates will be paid for 4 years from now. He also wants to buy a life insurance policy, but is financially limited until the car is paid off. Which of the following type of policies would be best for B? What is limited term?
Nothing. Something they made up, so you know that ain't it.
Oh, okay. Okay, I say I ain't even never heard of that. Okay.
How does a modified life insurance policy work?
I was sitting over here thinking about that. Because I was thinking limited pay would be more expensive because it's for a shorter span of time.
No, limited pay. You got a whole name. Limited pay is 10 pay life, 20 pay life, paid up to 65. That ain't got nothing to do with paying off no car. Interest sensitive whole life is where the cash value could vary because it's based. You see, interest sensitive means if the interest rates is sensitive to the interest fluctuating, so it could pay more or grow faster. Modified life is a whole life policy where the premium starts low and goes up one time. So basically, you gotta use your kind of, what's the word I'm looking for? Discernment, or what's the word I'm thinking? Basically, see how this policy would apply to this situation. Basically, they're saying the guy don't have that much money right now, but he want to get started. But he'll be able to afford more later when the car get paid off.
Right.
So that's why logically a modified life plan would be better because he can start off low, and by the time the car's paid off, the premium go up.
Okay.
You see how that works?
Right. Okay.
So the first two letters of modified is what?
M-O.
What M-O stand for?
Mo.
The first two letters. No. The first two letters of modified is M-O, and it stands for move once.
Okay, move once.
Move once. That premium gonna go up one time, and then it's gonna be level after that. So when you read these questions like that, you gotta know this premium gonna go up one time. This is kind of what they trying to say. So a lot of times, the more tests and questions you ask, you read and answer, you basically kind of get to the point of what they want to know. What are they getting at?
Gotcha.
They want to know that you understand that this premium gonna go up one time, and that would be suitable for this situation.
Okay.
So it ain't that deep, but you do gotta understand how the policy works. All right, your turn.
In increasing and decreasing term policies, which policy component fluctuates during the policy term? Cash value.
No, man. Read it one more time. I'm gonna give you another chance.
Okay. In increase and decrease in term policies, which policy component fluctuates during the policy term? Okay. Not the death benefit. Oh, well, the premium can.
All right, young man. Term life insurance does not build no cash value. Now, you got to know that. That's going to be on the test file.
Term. Yeah. Okay. Yeah. Okay. Yeah.
Term don't build no cash value. They really think that when you hear, when you see increase in term, decreasing term, level term. Like it's two words to describe this, right? Like level is the first word, term is the second, decrease is the first word. That first word is most often used to describe the face amount. And not most often, it's always used to describe the face amount. And face amount, I'm looking at this question, what's the same thing as face amount?
Death benefit.
Death benefit. Bam, that's the answer. In term, life insurance, the first word describes the face amount. You gotta know that. And you gotta know cash term don't have no cash value either now. You gotta know that. If you don't know that, they ain't giving you no license now unless you sneak up on it and get it. A rider that may be attached to a life insurance policy that will adjust the face amount based upon a specific index, such as consumer price index, is called what?
Is that the cost of living rider?
Yeah, cost of living. Living need is something they made up. Payer rider is a real thing. Accelerated benefit rider is a real thing too, but that ain't got nothing to do with no increasing with no index. Payer rider, you know what payer rider is if the owner.
The payer rider is with the juvenile, right?
Right. It's a juvenile policy because the child is covered, and if the owner or parent become disabled, they'll waive the premium. Accelerated benefit is if you become terminally ill. So the only logical answer is C. All right, read the next one.
The commissioner must examine every domestic issuer at least once every, is it two years?
I want to say it's 3 years. It's not 2. I think it's 3. Let's go with 3.
Okay.
I'm not all that. I don't remember those time periods as well as I understand how the types of policies work. But with this stuff, like something like that is pretty cut and dry. We just gotta, once we get the right answer, we gotta write it down till it stick.
Okay.
All right, read the next one.
Representations are written or oral statements made by applicants that are
I ain't gonna help you.
Considered to be true to the best of applicant's knowledge.
Bam! Exactly. What was you thinking about? What was you considering?
Nothing. I was just trying to read them.
Oh.
I need my glasses on, probably.
Okay. I ain't gonna disagree with you. So, consider to be true, and a misrepresentation is the opposite of that. Right?
Right.
Perfect. All right. An insured purchased a life insurance policy. The agent told him, depending upon the company's investments and expense factors, the cash value could change from those shown in the policy. You remember just now, like 2 questions back, I said one of these policies, depending on, is sensitive to the, well, I'm giving you the answer.
Interest sensitive.
Right.
Interest sensitive.
It depends on how these companies' investments perform. Your value could be more or less.
Now let me ask you this question: the difference between that and annual renewable. Well, no, I know that. I know the answer to that.
Right, man. Interest sensitive and annual renewable term is like night and day.
Night and day, yeah. Because annual renewable doesn't deal with interest at all.
Right. Annual renewable term don't have no cash value. No term has any cash value.
Yeah, I just saw that. I saw the term there. Okay, got it. Okay.
All right.
Separating everything in my brain now.
Repetition is the mother of learning. So I don't care what it is. If we look at this stuff enough times, it's gonna stick.
Okay. Which of the following life insurance policies allows a policy owner to take out a loan from the policy's cash value? Now, you can do that in C.
Bam! If you had got that wrong, I was about to start tripping. Cause we done said 5 times term life don't build no cash value. So ain't one of these over here you gonna have any cash value you can borrow, right?
Yeah.
All right. What is the purpose? And you see how many questions on this test about universal life, so you know how important that is. So it's like 6, 7 questions on that one type of policy. You got to know that sucker backwards and forwards.
Yeah.
What is the purpose of establishing a target premium for a universal life policy?
Would it be to keep the policy in force?
That's it. You asked me like you might not have been confident with that, man.
No, I think I'm gonna be honest with you. I asked that. I said it almost as if it was a question, but I really knew it because after I left the test, I think I looked that up because I knew I got that question wrong on the test.
Right.
I missed a question about that because that was one on there, and I had flagged it to go back. It was like 5 or 6 I had flagged to go back, but
yeah, that's a universal life question. I mean, it's literally, I'm telling you, in North Carolina, it's going to be at least 8 or 9 questions on universal life. You got to know its flexible premium. You got to know target premium. You got to know partial withdrawals from the cash value. You got to know its annual renewable term plus cash value. All of that's universal life. That's the number one thing you got to know to get your license in North Carolina, as far as policies go. The type of insurance that provides increasing death benefits, as insurance age is called. Now, we just talked about this 3-4 questions ago.
Increase in term?
All day long. Easy peasy. All right, you read this one.
In an adjustable life policy, all of the following can be changed by the policy owner except the length of coverage?
Nope.
No, so the length of coverage, the premium, the amount of insurance. So the type of investment?
Right, because there is no investment.
Okay, that's something else.
Right, an adjustable life policy, you can change the type of plan, you can pay more or less, you can decrease the coverage, you can't increase it. But D is completely false because there's no investment.
Gotcha. Okay.
All right. In order to qualify for conversion from a group life policy that has been terminated, you got to have that job 5 years. Bam. See. You see that?
Mm-hmm.
See how fast I answered that?
Mm-hmm.
That's how you don't be playing with it, man. If you know the answer, pick it, and don't be reading all that stuff getting confused. So on this, so people say, I got life insurance at my job, right? That's the number one excuse people have for not getting life insurance, right?
Mm-hmm.
Well, if you ain't at that company 5 years, you can't take it with you no way. And even if you do take it with you after 5 years, the premium not going to be the same. So that's why we on a crusade to educate people. You got it? Like people say, well, I got it from my job. Well, no, you don't. You weren't even there 5 years. And where are you? How much you paying? They don't know because they don't have none.
Right.
All right, next question.
After 3 years of making payments into a flexible premium deferred annuity, the owner decides to surrender the annuity. The insurer returns all the premium payments to the owner except for the predetermined percentage. What is the percentage called? Insurer returns all. So this is
You was about to say it.
the surrender charge?
Yeah. Man, you better go ahead and put it on out in the universe. I heard that S coming out.
Okay.
Surrender charge. Surrender charge is what the companies charge you for terminating your contract. That's the percentage they charge you. It's called a surrender charge. Got it?
Yeah.
All right.
Be second guessing myself on these things.
Don't do that. The first thought to come to mind, put it. And next, if you second guess yourself, they all gonna start sounding right.
The death protection component of universal life insurance is always whole life.
No.
No?
No. You definitely got to go back through my video and find that part about universal life. You can't know that. You got to know this. You got to know it backwards and forwards. If you don't know nothing else, you got to know that. All right, what's the answer?
Oh, what? ART?
Bam, ART. Universal life is ART plus cash value, plus a cash account. Annual return plus a cash account equals universal life. You got it?
Yeah.
All right, say it then. Say that one more. Say it.
Universal life is ART plus a cash account.
Bam. One more time.
Universal life is ART plus a cash account.
All right, perfect. All of the following are true regarding rebates except dividends are not considered to be rebates.
Okay.
I don't know. This is kind of tricky because I got this one wrong before. I know this is true. Dividends are not considered to be rebates. I know that. It says all of these are true except. So let's just go with that. Because when they say except, it turns into a false statement. True or false.
Right.
So it's asking me which one of these is false. I know this is false. I think A and B might be, one of them might be false, but I know D is false. So let's just go with I know. All right, next.
The required privacy disclosure notice must be provided by insured to current policyholders at least once in any period of, is it 12 months?
I think it's 12 months. I'm guessing on them time periods, like I said before, but let's go with 12. You said 12, and you got to go with your first gut, your first instinct, or your instinct.
Can't remember. No.
An insured has a continuous premium whole life policy. She would like to use and so don't get thrown off. What is continuous premium? They just made something up to try to make it sound complicated. A whole life policy is just a traditional whole life is the same as permanent whole life insurance. Okay. She would like to use the policy dividends to pay off her policy sooner than she would have possible otherwise. What dividend option could she use? And the answer is which one of these out of these four choices sounds like you're going to pay the policy off sooner?
The paid up option.
Bam! down.
Or the reduction.
Man, see, here you go about to change it. Man, you about to fall out.
Okay.
We about to fall out, man. When you, the
A
first thing you said with some confidence and put it in, let's go.
Right.
Paid up
Woo.
option. To attain
40 credits.
40 credits. Perfect. There you go now. That's what I'm talking about.
They give me about 10. They give me 40 of them like that. I'm good to go.
When a special policy combines decreasing term insurance with whole life insurance to provide the insured family with a monthly income upon the death of the insured, while maintaining perfect coverage until the end of the income payments.
See?
What? That's how you supposed to drive right there, man. That's what I'm talking about. All right, next.
And any agent, broker, or limited representative who acts for a person other than himself negotiating a contract and insurance for the purpose of receiving the premium is deemed to be C.
All right, let's go with that. If the annuitant dies during the accumulation period, who will receive the annuity benefits?
C.
All right, next.
If the commissioner denies an initial application for an agent, how long does the applicant have to request a review after receiving the notification of the denial? This is either 30 or 30 days, I want to say. I think.
All right, let's go with 30 then, because I don't know. Go with your first thought. If it's not right, they're going to tell us in a second, then write it down. We can't miss it again.
What type of insurance policy allows the policymaker to pay more or less than the plan premium?
What kind of life insurance I said earlier had flexible premium?
Universal life.
What the flexible premium means, you can pay more or less. That's the definition. Okay. Flexible means you can pay more or less, or skip payments. Okay. Once again, you see how many questions on universal life on here.
Which of the following best describes fixed period settlement option? D.
That's it. D is right. Which provision of life insurance policy states insurance duty to pay the benefits upon the death of the insured, to whom the benefits will be paid?
This was on the test too.
Insurance clause. Insurance clause is the promise to pay.
Okay.
Entire contract includes the application. Beneficiary clause includes who's going to get the money. Consideration clause is what they use to determine if they're going to issue the policy. Insurance clause is their promise to pay. Got it?
Okay. Insurance clause.
It's promise to pay. Insurance clause is promise to pay. All right, next.
An Internal Revenue Code provision that specifically provides for an individual retirement plan for public school teachers is it A?
Yeah, man, me and you about to fall out, man. You gotta answer them questions with confidence. Don't ask me a question. Is it A? It's A. 403B, always go with teachers, preachers, and nonprofits. Got it?
Got it.
TSA stands for tax sheltered annuities. Teachers, preachers, nonprofit. If you see something about a 403B and a teacher, that's always go together. That go together like peanut butter and jelly.
Got it.
When an insured makes truthful statements on the application for insurance and pays the required premium, it is known as which of the following? I want to say
contract of adhesion.
No, man.
No. No.
No. Contract of adhesion is the take it or leave it aspect of life insurance, meaning you even.
Oh, yeah. I remember that from the class now. That's right.
You remember from the class, you better write it down and people think they can remember everything and forget and don't remember nothing. You got to write that down. Contract of adhesion. That's the key to why people don't pass. They think they can remember it and can't remember nothing. Write it down. Always forget. Write it down over and over and over. Review your notes. Write it down. Take a test. Write notes. Review your notes. Write it down. Take a test. The answer is, I think it's consideration.
Consideration.
Because that's what the client agrees to pay. I mean, that's what the insurer can use to decide whether they're going to cover them or not.
Okay.
Acceptance is when they actually issue the policy.
Okay.
All right, next.
Who pays the annual agent appointment fee? The agent.
Damn, the agent. You see that? If you hear said, is it the agent, then me and you is going to be fighting. Who can request changes in premium payment, face amount, loans, policy, loans? The owner.
Policy owner. Yeah.
Perfect.
They ain't gonna put nothing like that on the test. Too easy.
Yes, they are. Yes, they are.
Which of the following is true about the 10-day free look period in the life insurance policy? B.
That's it. You see how easy that was?
Yeah.
An individual who sells life insurance solely as a foreign military sales agent works on military license. It might be restricted license, but we'll find out in a second. All right, you read it.
Which of the following would be considered an advantage of owning term insurance? Is it D?
It's D, man. Why you keep saying is it? It's D.
That's why I said not is it. Then I said D.
It's D. It's D. It's D. All them. The first one, it don't have no cash value. Don't have no living benefit. All term got is death.
It's temp. Yeah.
Temporary. Exactly. All term got is cash back. Is all it's got is death benefit and a premium for a temporary period. After insurance contract ends.
5 years.
Perfect. There you go. I hear you know that one. All right. Which of the following documents must be provided to policy owner or applicant during policy replacement?
C.
No.
Did I read it wrong?
Read the question.
Which of the following documents must be provided to the policy owner or applicant during the policy replacement? Oh, replacement.
Bam.
So
it's A.
Notice regarding replacement. Okay, it's for replacement. Okay, so the buyer.
Well, you know what? Buyer. Hold on. You might be right. Notice regarding replacement is in there too. But buyer's guide is something they got to get
the
too.
Buyer's guide and the policy summary.
Right.
Is that when they actually get the thing?
I think they get buy. I think everybody that gets a policy gets a buyer's guide and policy summary. Everybody. I think you get a replacement form too when you do a replacement. You know what I'm saying? That's what I think the difference is. Everybody gets a buyer's guide and policy summary, but you get a replacement paperwork too when you're doing replacement. Let's leave it right there.
Okay.
All right, almost done. A young father would like life insurance policy to provide coverage for all 5 family members at the lowest cost. All 5 family members. What's the answer? Keyword is family.
Family. But all 5.
Don't get caught up in the 5. The keyword is family.
So would it be D?
No, it's A. It means B. It's B, family protection.
Oh, family protection.
If it ever says family income or family maintenance, that's the one that provides income for 20 years.
It's going to talk about money.
Right. It's going to be like family maintenance always combines whole life and level term for 20 years. Family income going to combine whole life and decreasing term. Family protection going to cover everybody.
Gotcha. I see the difference.
All right, next.
Which of the following is true regarding the accumulation period of an annuity? So,
all right, break it down. What happens during the accumulation period?
So money is going in.
All right.
It's growing.
That's right. Well, what? So annuity period.
It is tax deferred.
Bang. So what's the answer?
So it's C.
Exactly. Accumulation period money going in. Annuity period money is coming out. So you know it ain't these other ones. Right? Receiving income. A is the annuity period, not the accumulation period.
All right.
And limited to 10 years. No, you can put money in annuity for 50 years if you want to. If a life insurance policy increases significantly in face amount when insurer reaches a specified age, what type of policy is it?
A.
Bam. Okay, let's go ahead and wrap these last 13 up. Which of the following types of insurance will provide the greatest amount of protection for a temporary period? Lord have mercy. You ain't even got to read all that. All right, you read the next one.
An employee is insured under her employer's group life plan. If she terminates her group coverage, which of the following statements is incorrect? C is correct. So,
when you convert a policy, what does it change to?
it converts to whole.
Right? What's A?
So A is incorrect
Why?
because it says to term or permanent.
Bam. See that? When you read that first one, you knew that was right. Why you keep reading all them other ones, wasting time? A father owns a life insurance policy on his 15-year-old daughter. See, the more you read all them other questions, it make you, it gets all discombobulated. Right.
Yeah.
When that thing said term or permanent, that should have been like ding, ding, ding. That's the answer. Next. A father owns a life insurance policy on his 15-year-old daughter. The policy contains optional payout benefits. So if the father becomes disabled, she ain't got to pay. All right, bam, it's A.
Yeah.
Well, no, and
If the insured will have to pay for it.
No.
Yeah, it'll be waived.
Right. I read the rest of them, and then that threw me. Then see, once again, I read the rest of them, and then D got me getting confused. The rate of premium should be refunded. What? What was that? All right, next. You got it?
Under which non-forfeiture option does the company pay surrender value and have no further obligations to the policy owner? The cash surrender.
Yep. All right. Which of the following is the basic source of information used by companies in the risk reduction process? What you think? What's the number one thing the company considers to issue a policy?
Is it the warranty?
No, man. What do we, if you are agent and you meet with a client, what do you have
the application.
Yeah, you gotta do the application, and that's what they decide.
Yeah,
that's the first thing they use to decide whether they're gonna insure them or not.
Yeah.
Which of the following types of annuities provide the highest monthly income? Big check, no Benny. Which one? You thinking too long on this one. This is super easy.
Let's see. Life.
What you think, man? You got time's up.
Okay. Life with 10-year period certain?
No. Straight life. No? You got to look at that YouTube video on annuities. Straight life is easy. A straight life annuity has no beneficiary and it pays the highest benefit. The highest monthly income. That's easy, brother. That's just like term is temporary. Straight life annuities pay the highest monthly income. You got to know that. In fact, say that. Straight life annuities pay the highest income.
Straight life annuities pay the highest benefits.
Right. Highest monthly income with no beneficiary.
No beneficiaries.
All right. Say it one more time.
Straight life pays the highest annuities.
Highest monthly income.
The highest monthly income. No beneficiaries.
Bam. All right. You got to know that, brother. You got to write it down 50 times. It's going to be on the test. I promise. Which of the following must an insurer obtain in order to transact insurance business in a given state? Certificate of authority. All right, next.
In insurance, an offer is usually made when?
What do you remember I said when the agent sends the application to the company, they have to decide whether they want to issue it or not.
Mm-hmm.
All right. Which one of them sound like that?
Makes the application to the insurer approves the application. So A.
Bam. A. Exactly. All right. What is the main purpose of the Life and Health Accident Guarantee Association? Uh-oh, now we talking. What is the clause that describes the method of paying a death benefit in the event insurance and insurer are both killed in the same accident?
C.
At age 30, after going to start an insurance program, but realizing his insurance needs would like to change, he wants a policy that can be modified to accommodate those changes. Okay. Which one of these you can change? We talked about it earlier. You can change 3 things. You couldn't change the investment.
Adjustable line.
Bam. Next. The minimum interest rate on index annuities.
D.
Bingo. All right, and 2 more. Doing a partial withdrawal from a universal life policy, which portion is taxed?
The interest.
Bam, interest, always taxed. Uh-oh, you on fire. Last one, let's finish strong. An agent completed a total of 30 hours continuing education during life renewal. How many of them will these hours make the agent apply toward the next period? So he do it every 2 years. How many he can carry over for the next 2 years?
Oh, you have to have 24. Wait a minute. It says he did how many?
He did 30.
Renewal period. So 24. He can carry 6 over.
Bam. Let's see what we got. Perfect. We passed. We made 88. We only we missed 7 questions. Y'all crazy. It's $10,000.
10,000.
Take a picture of these screens. 10,000. Got it. 5 years. Dividends are not, man, be quiet. Now look at you. You jumped out there and said 40 credits. The answer is 6.
Wow.
Take pictures. Just as long as we don't keep missing the same ones over and over, we good. Who pays the annual appointment fee? Oh, the insurer does. All right. Oh, yeah, I thought it could be restricted license. Taking pictures. And they just mentioned. Dang, I said that was out there. I gave you the wrong thing. In insurance, the offer is usually made by the applicant. Oh, I had it backwards. I thought the company made the offer. Okay, cool. All right, young man. If you study what we just went over and you learn these questions cold, you're gonna pass. I'm gonna put this video on my channel. You can watch it over and over.